Hey, Andy, can you hear me? Because I cannot hear you. I cannot hear you. I hope you can hear me. I cannot hear you. Can you hear me? Okay. Okay. One, two, okay. Okay, let's see. One, two, one, two, one, two. No. All right. Okay. Okay.
I can hear you now. Can you hear me?
Very good. Yes.
Fantastic. Good to meet you.
Likewise, we made it. We made it. Excellent. Awesome. Very good. Okay. We haven't spoken before. So I guess before we start the interview, I thought I'd ask you, two things, right? What is your core area of expertise? And the second thing is how would you like me to introduce you?
The core area expertise is asset allocation, mindset, approaching the investment of cryptos in a professional manner.
Okay.
Which also means, day trading, your Gann fans, your Fibonacci's, but more importantly, rather than just taking a position and hoping it goes up, there's actually a logical progression to it. And then that was the first answer to your question. And your next, and what was your second question?
How would you like me to introduce you?
First name, last name. I'll type it in here in the chat area.
Okay. So how do I pronounce that?
Lapointe.
Andy Lapointe.
Yes, silent E on the end.
Perfect. Andy Lapointe, founder of BitcoinLearningCenters.com. Okay, great. Okay, so what exactly does BitcoinLearningCenters.com do?
We're a step-by-step guide to teach people how to approach cryptos in a professional manner, first and foremost, and also number two, give them step-by-step strategies on a daily, weekly, and monthly basis, including asset allocation strategies, which include blue chips, Bitcoin, and then we have our penny cryptos, which is stellar, pennies, and then also allocated into ICOs and what to look for ICOs.
Awesome. Okay, very good. Okay, so I guess as far as the main topic of the interview, what do you think? What would you rather talk about? What do you think is something that's not really covered out there?
From what's not really covered is the professional approach to crypto investing, because I was 15 years as an investment advisor. I'm 49 years old. A lot of the folks getting into crypto are a little bit younger, so they may or might not be approaching it in a professional manner and managing their assets on a long-term basis. And a long-term is 6 to 12 months, to be honest, in crypto. It's not long-term wealth. It's more of a long-term mindset. So that's why you have different tiers of investing. So approaching it from a risk management standpoint of 6 to 12 months, your core strategies of Bitcoin can be further than that, but more importantly, approaching it with a plan in mind. I don't think that's covered. I mean, you've talked to a lot of folks. I mean, I've talked to a lot of folks. What are you finding in the marketplace? I mean, a lot of folks come in and talk about technology and how it's changing the world, which is great. But what's the approach to actually investing in crypto?
Yes, I think going down the asset allocation route, I think what is not really covered is, okay, granted, people want to get into Bitcoin. What next, right? Let's say you've got 100 grand, you want to invest in this space. What do you do, right?
Right.
Because, and I think we can start the interview this way, is what I found is that those people who have made, millions in crypto are people who, for the vast majority, have invested, most of their assets or a very large chunk of their assets into this gamble. And, good for them, it paid out. Right. Now you have the question of, you've got, the older demographic who are looking at cryptos who are kind of thinking, okay, well, is this something that I can include in my retirement accounts? Well, then that begs the question of, how much, right, and where. Okay, so how about we do this, Andy? How about we angle it around, hey, from a long-term investment perspective, not a day trading perspective, not a speculative perspective, hey, say someone starts with, say, $10,000 to invest in cryptos or $100,000, given the current landscape, where exactly would you recommend, or what do you think would be a good split in terms of asset allocation of major cryptos versus ICOs versus the altcoins? How about we do that?
That's perfect, because from a professional asset allocation approach, again, there's not too many people talking about that. They're more talking about the technical rather than the fundamental analysis, which is interviewing the teams and the development teams and such. But also, it's all about making that quick dollar. And as fast as that dollar can come, it can also go. So you have to have your exit strategies in place, your stop losses, and your asset allocation in place.
Awesome. Okay, very good. Let's do it.
All right.
Hi, everyone. This is Gambacorta here, and I've got, with great pleasure today, Andy Lapointe, founder of BitcoinLearningCenters.com, who will be talking to us about asset allocation. Now, I know it sounds a fancy word, but it's a very, very important topic. So, hey, Andy, welcome.
Thank you, Tiz. I really appreciate you having me on, and thank you very much.
Pleasure. So the main topic of this short interview today is something that is a huge, huge question in the crypto space, yet so few people are talking about, right? Andy and I were having this conversation just before starting, which is, you see those insane returns in the crypto space. And I have met a lot of those, the new Bitcoin, so to speak, millionaires, and gladly worked out for them. What they did is they put a significant portion of their net worth, of their total assets, of their total savings into some type of Bitcoin or crypto related play, and then it worked out for them. Well, fantastic. But for everyone else, right, who's just now starting to get into what is, in my opinion, the future of money and the future of finance, well, that begs the question of, say you've got $10,000, $100,000, whatever it is, right, to invest in this space. Well, how should you best allocate that capital? So not necessarily, which ICO, which coin should I buy, but rather, are you going to invest that in more stable cryptos, in more adventurous ICOs, etc.? So it's with great pleasure that I have today Andy, who's been an investment advisor for, if I'm not mistaken, 10, 15 years or more. And so he will give us a very different and, most importantly, professional and informed perspective over the key question of, how should you allocate your money across cryptos? So Andy, once again, welcome.
Great. Thank you, Tiz. I really appreciate it. Thank you very much.
Before we get kind of deep down into this question, Do you mind telling us a bit about yourself and what got you into cryptos?
Well, actually, and that's a great question. I started as a registered investment advisor back in 1994. And so for the next 15 years until 2009, I was a registered investment advisor, a Series 7 stockbroker, and a mutual fund wholesaler. I was working with high net worth and ultra high net worth individuals. I worked with asset allocation teams for some NFL players. So I'm very familiar with asset allocation from a net worth as well as a high net worth and an ultra high net worth strategy. But fortunately, when I was involved with the stock market in 1994, I was able to witness and experience and enjoy some of the profits of the tech boom and the internet craze of the late 90s. But as it went up, we all know what happened in 1999. It did pop. So the unique perspective that I bring to the table is not only real world experience about asset allocating on the way up, but also asset allocating on the way down. And then in 2009, I did let my registered advisory registration expire, so I'm no longer a registered investment advisor. So what we're going to talk about, it's not recommended investment advice, because I've always been taught to say that, but most importantly, it's real world experience, how you can asset allocate your crypto, number one. We can talk about exit strategies, number two, but also number three, in addition to the real world experience from the investment advisory standpoint, I got involved with blockchain technology, fintech back in about 2013. Actually, I had a friend of mine who knew a friend who knew a friend who knew some folks involved with Silk Road. So that's how I heard about it. And at first, digital money, I'm always interested in money, like everyone else on this, on the video. But when I heard about what Silk Road was doing, to me, it was a business model. It didn't matter if they were buying or selling. I mean, legally it did, but I looked at that as a business model. And that's what really got me interested into it, number one. But also number two, I saw Charlie Lee on CNBC way back when, the first time he was on CNBC, from Litecoin. And Litecoin went from $2 to about $40 within about 3 to 4 weeks. And at that time, I was scrambling, how do I learn about this? How do I invest in crypto? How do I learn in Litecoin? Because as soon as I heard Charlie Lee is a fantastic individual, fantastic speaker, great insight, but more importantly was the technology behind Litecoin. And understanding the technology behind any coin you invest in is very, very important. But to answer your question, that's a little bit about my background and how I got involved with crypto from 2013-ish.
Awesome. So let's start with a simple question, which you touched on, which is someone who's investing into cryptos now, and we happen to be in a downtrend for the last few weeks. Is that, okay, just to be clear, so asset allocation, and correct me if I'm wrong, is essentially, the how you split your money across different types of crypto investments. So someone who's starting now, right, in a downtrend, should he, and someone who's looking at being in cryptos for a 12 to 36 month period, should he asset allocate differently than if we were in a bull market?
That's a very good question. And the answer to the question is, it really depends upon your goals. Because I do a lot of presentations, I do a lot of radio interviews, I do a lot of meetup groups. And the asset allocation question, a lot of folks really don't think about that. But when you're thinking about, number one, investing, you need to determine why you are investing. And that includes a time frame. In crypto, it's very short, from 6 to 12 months. But in all reality, we do need to take a look out at 24 and 36 months out, because number one, the coins are very important, but it's also the technology under the coins that's going to bring crypto and blockchain to the next level. So to answer your question, we are in a bear market. This is an ideal time to begin asset allocation. And the reason is, you're not fear of missing out, because the market's pulling back. It gives you more time to understand the technology, read about the development team, read about the white papers, but more importantly, you're not going to be making emotional decisions. So right now, from an asset allocation standpoint, and everyone get a pen and paper and write this down, what you want to do, and we teach this in our courses, but most importantly, is draw a triangle, okay? And on the triangle, divide it up like this. You have two lines. Your bottom baseline here is what I like to call your blue chip cryptos, which is your Bitcoin, your Ethereum, which have been around for more than 2 or 3 years. Your middle section here is what I call your penny cryptos, or the stocks, the cryptos that the price of the underlying crypto is still $1 to $5. For example, Stellar is about 32 cents. Ripple is about 88 cents today. But more importantly, these are your next technology stocks that you're looking at. And up here is your ICOs, which should be about 5 to 10% of your portfolio. Okay, this penny cryptos are going to be the next allocation, and then your bottom baseline cryptos is going to be about 60 to 80%. So you want your main asset allocation in the bottom of the pyramid. So as you go up the pyramid, 60 to 80% in the blue chip cryptos, Ethereum, Bitcoin, the remaining in the middle asset allocation, then your ICO should only be 5 to 10%. And I know ICOs are very, very popular today, but truthfully, they should be a small portion of your crypto investment. And the reason is liquidity. Because compared to 2 and 3 and 4 years ago, when there was only maybe 200 to 300 to 400 cryptos out there as they were coming out, when you bought into Ethereum, when you bought into some of the other ICOs, Digex, when you bought into the original DAO, which kind of blew up, and that's what caused Ether Classic. But the point of the matter is, the more ICOs are coming to the marketplace, a lot of them are not going to be as liquid as a couple years ago. So if you did make some outstanding returns over the last couple years, remember to keep that ICO allocation very, very small, because number one, they may not have liquidity. And number two, if they don't have liquidity, how are you going to get your money back out? That's why I'm suggesting with the tip of your pyramid, a very, very small portion of ICO, where 4 years ago when the market was going gangbuster, you wanted to spin your profits out of your Bitcoin, out of your Ethereum, out of your Digex DAO, and spin it into the ICOs, because there are so few of them out there. Today, the market is a lot more cluttered. It's a lot more hard to understand, to be quite honest, because a lot of them are just mirrors and mimics of other ones coming out. So that's a basic overview of asset allocation.
Can you define liquidity for those who are not familiar with it?
I'm sorry?
Can you define liquidity for those who are just getting started and not familiar with the term?
Oh, that's a great point. Basically, there's two liquidity, the way I just used it and the way the question was asked, is the ability to access your funds after you make the investment. So let's take a step back. Let's say you have $50,000 worth of investment in Bitcoin. Doesn't matter what your cost basis was. Let's say you have $50,000 and you see an ICO that is going to be available for the next 30 days, 20% bonus for the first 10 days, 15% for the next 5 days, so on and so forth. You decide to take that $50,000 of your Bitcoin position, move it into the initial coin offering, or the ICO. In return, let's say they give you one ICO token for your Bitcoin. So you're going to have 50, 60 ICO tokens, okay, of this new ICO that you're hoping is going to go up. But if you take a look at the white paper and the roadmap of the ICO, it's going to take them maybe 3 to 4 months to 6 months in the future before that token is actually distributed. And that's typical with an ICO. It may be shorter, maybe longer, but from the time you invest, you're not going to have access to those tokens of that particular ICO. So let's say in 6 months, they issue that ICO. Either you can put it on your Ledger wallet, they have an online wallet, but you can store that ICO token, but there's no exchange that is willing to list that token, like the popular exchanges like Bittrex and Polynex and Philonex, or excuse me, other tokens. So you can't get that token out. The only other way to get that token out is to trade amongst other ICO individuals in a decentralized exchange, or look at a smaller exchange that may have listed that token. Unfortunately, if you go to a smaller exchange, if the daily volume on that token is only 10 buys and sells per day, and you want to liquidate 5,000 tokens, you're going to move the market on yourself because there's no one on the buy side when you're trying to sell. So ICO liquidity is absolutely vital today. Again, 3-4 years ago, it didn't matter. Everybody wanted it. The exchanges needed the tokens, but the ICO liquidity is very, very important today. So look at the potential liquidity ICO that you're looking at, and that's why I only recommend 5% of your assets into an ICO. Interesting.
Okay, so the triangle which you presented, which I thought was very, very useful. I'm sure a lot of people, would take note and model that. So would you recommend to kind of use the same approach in, whether the market is going up or down? And I guess the follow-up question to that is, is that kind of asset allocation model, so to speak, the same for whether you're planning to be in the investment for a year or for 10 years?
To answer your first question, the asset allocation, what I will do is I will put a better version of this together, which I actually have a PDF, and I can email it over to you so you can give it away to your viewers.
Thank you, Andy.
That way we'll be good to go. Next question, to answer your next question is if you're looking for short-term asset allocation compared to long-term asset allocation, your triangle, you only want to vary that anywhere from 5 to 10%. So for example, that bottom tier of the pyramid, that bottom portion was 60 to 80%, okay? If you want to get a little bit more aggressive, you may want to asset allocate this bottom tier of the pyramid, maybe from 40 to 60%. Put more into your middle tier, your penny cryptos here. And instead of 5 to 10 in a more conservative approach for your ICO, you may want to go 15 to 20. So if you're going for a little bit more, and I do have different risk tolerances models that I can get over to you too. So, but first and foremost, you need to determine exactly what your time frame is for purchasing, and that determines your asset allocation. And I'll get them over to you. But one other thing you want to look at too is the dividend paying cryptos. Did you know you can actually get dividends from cryptos?
Amazing. Yes, I'm so glad you're mentioning it. Yes, can you explain, please?
Now, basically, everyone's familiar with Nero, correct?
Sure.
When you stake Nero, you actually get free tokens of gas, which powers the Nero network. So the point of the matter is, with a longer term investment, rather than just going for asset appreciation, at capital appreciation, buying Bitcoin at 11,000, which it is today, hoping it's going to go to 40, which more than likely it will. But the point of the matter is that's just capital appreciation. For longer term investments, you're going to want to stake some of your investments into Nero or other dividend offering cryptos, and that dividend is in sense paying you for holding that crypto, number one, but number two, it's giving you a return on an investment that you're holding for the long term. So if you're holding more long term, look for the cryptos that are offering stake options. For example, Cardano is going to be soon offering stake options. You have a number of different coins that are beginning to stake, so you get that quote unquote dividend return. So for longer term investors, allocate a portion of your portfolio into those staking cryptos.
Awesome. Now, when and I know, I'm so glad you're mentioning this. So when looking at, the dividend cryptos, in the stock market, anything between 2 and 3, 4, 5% is considered to be a good dividend. What is the equivalent in the crypto space?
Well, and that's a great question. Because unlike a traditional dividend stock, when you buy, on the New York Stock Exchange or one of the other exchanges around the world, you're getting cash for that, number one. So you can either take that cash out, put it into your bank account, or you can dividend reinvest and purchase more ExxonMobil, for example, if you're on a dividend reinvestment. With a crypto staking or a crypto dividend position, you really don't know what your return's going to be, because you have a capital appreciation on your main stake. Let's say the minimum stake for a certain crypto is 10,000 coins, and each one of those coins is $1, so you have a $10,000 stake, but they're paying you at 4 to 5% per year, which is $400, $4,000 per year if you have $400 at a $10,000 investment compared to 4 to 5%, but that 4 to 5% has a greater potential for appreciation in addition to that core, because your core staking position, as that becomes more valuable, more than likely the free crypto that you're getting for staking is becoming more valuable, because that dividend crypto is actually used to power the network in the Nero gas example and support the network. So as they both go up in value, you actually could have greater appreciation than just that free 4 to 5% return of the free cryptos.
Awesome. So in a sense, you're kind of dividend reinvesting in cryptos.
That is exactly right.
Awesome.
And for longer term, not short-term positions, 30 to 45 to 60 days, take a look at those dividend cryptos. And again, those are your main core positions for your longer term investments, because if you're getting 4 to 5% on a $10,000 or a $50,000 or $100,000 investment, that's a core position. So that's a great way to look at crypto asset allocation. But more importantly, you have to understand why you're doing it. You have to understand, number two, your time period, and number three, what's the benefit of those positions? Free dividends, quote unquote, free tokens. I mean, what's the benefit of those positions?
Now, I'll play devil's advocate here, and let's say that everything else being equal, obviously the dividend cryptos are a lot more interesting than non-dividend paying cryptos. What's the catch, right? What is the downside here?
Well, the downside, number one, any investment in crypto or stocks, real estate, it involves risk. There's no doubt about that. But number two, the downside of holding a position in a dividend paying crypto, for example, is the crypto could become outdated. The development team could decide not to create the technology needed to move it to crypto 3.0, for example. So that's why it's very, very important when you look at a staking position, you want to make sure that the development team is in place, or the management team in this instance. Number two, look at the white paper, which will reveal the roadmap for the next 6, 12, 18, 24 months, because if you're going to be putting 5, 10, 15% of your core positions into a dividend crypto, you want to make sure that team is in place. You want to make sure that that technology is sustainable. You want to make sure that the information that's coming from the development team is official, coming on Twitter, not random Reddit posts or anything like that. You want to make sure that you're going right to the forums that the developers are giving that information on. So to answer your question, the downside is you have to keep on top of your cryptos, which is always good. So you want to know how that technology is advancing, which of course is helping that capital appreciation of the underlying coin or the underlying token.
Excellent. Wow. Yeah, makes a lot of sense. Just to wrap up on kind of overall with asset allocation, so is it fair to say that the asset allocation model that you've presented applies mostly to a buy and hold strategy.
Yes, because the buy and hold strategy, number one, we're in crypto for wealth accumulation and wealth appreciation. Okay, so if we look at it, in a black and white answer, you're buying crypto to buy and hold. Okay, so unless you're looking at crypto from a day trading standpoint, margined up standpoint 2 or 3 times, and you're taking 100% of your portfolio and day trading it in and out of positions that, I've got a couple people that I know, they actually have 6-figure portfolios and they're day trading. They're taking a huge position in a certain crypto, margining up 2.5, 3 times, and they're using the crypto itself to as the collateral. So they take their core position, then they margin that core position. Let's say it's XRP. That's, you've got $100,000 in XRP. You use that to collateral and margin your XRP either on the long or on the short side. So they're margined up. They're 100% in 100% of the time, which is extremely risky. So this.
Andy, sorry. Can you maybe explain for those who are not familiar with the concept what exactly is collateral and margin in a nutshell?
Oh yes, my apologies. There are some exchanges that you can only purchase on the exchange, which means you can only purchase, Bitcoin. You can move back out to Tether, move into Bitcoin, and move to another crypto. Okay. There's other exchanges out there that allows you to take a $100,000 position in Bitcoin, for example. You can put that into margin. You can take that $100,000, and if it's a 2 times margin, you'll be able to margin and take market positions of $200,000 compared to $100,000. Okay?
Absolutely.
So the benefit about that is you get massive returns on the upside. That's why you need to look at your technical analysis, look at your Fibonacci's, look at your Gann fans, look at your support and resistance, your Bowler bands, but most importantly, as you're margining up, you're using that core position as a margin, and then you're using that to gain more on the upside of the market, or you can short the margin. So you're hoping that crypto's price is going to go down, and then you just buy lower since you sold higher, and that's profitable as well. So margin, you actually margin up. And if you can watch it second by second, I'm not recommending it, but I know a lot of people that do it. If you can't watch it, don't margin it.
Absolutely. That's my take. It's, there is, in theory, you could in with futures and other instruments, you could margin up, cryptos, even significantly more than that. Right. But I think, there is more than enough volatility in these markets. There is more than enough insider trading or of one sort or the other than to be taking margin position. Absolutely.
Well, and that's a good point. With the nice thing about the crypto margins, for example, Poloniex, you don't get stopped out until you're close to 30%-ish, where if you were margining in the forex market or the futures market, you're stopped out about 50%. Especially if you're for with Chicago Board of Exchange with the new futures on Bitcoin, you're stopped out a lot higher, so that volatility is going to take a lot of people out. So if you're going to margin, definitely paper trade it for a while.
Yeah, absolutely. Wow, very interesting. Okay, so if I was to kind of summarize our conversation in one sentence, effectively you're saying, if you're a long-term investor in cryptos and in the blockchain, and I think personally, I think that is the future. The upside is huge. Essentially, you're saying, build up your crypto portfolio or your investments with a similar approach with what you would do with maybe, stocks to a certain extent, and essentially, just let it run. Don't watch it every day. Just be in it for the long term. Is that fair to say?
That's exactly right. And being in it for the long term, and since we are in a market pullback, This is a great time to do your research and build those positions. Read the white papers, visit the websites. But no, as you mentioned, exactly summed everything up perfectly.
Thank you. Andy, thank you so much for your time. How can people get hold of you?
Folks can visit our website at bitcoinlearningcenters.com. And then also number 2, and there's a contact form and information on that website to get a hold of me. And in addition, as I mentioned earlier, I'll be emailing out to you the asset allocation triangle, and then some additional information that you can get out to your viewers and your followers as well.
Awesome. Andy, thank you so much. It's been a pleasure.
I really appreciate it. Thank you very much.
All right, we're done.
We good?
We're good. Thank you. Thank you. I know you've got a busy day, so do I. We've a billion things going on, but thank you so much, Andy. That was very good. Love the approach.
Perfect. Was that what you were looking for? Because, I mean, it's always good to do a quick recap of, not talking about what you've talked about before on your shows, but more importantly, bring something new to the table. I mean, was that what you were looking for?
That was spot on. It's I feel that, there's a lot of, young teenagers who are, sporting the cars and everything from cryptos. What I think is missing is a professional approach to key fundamental questions about investing in cryptos. Mm-hmm. And I think today was a perfect example.
Well, perfect. I appreciate that. Yeah, I'll get that over to you. What I'll do is I'll upload it to Amazon S3 and just send you a link, and you can just download it from there.
That's perfect.
If you don't mind, I'll put my contact information, on the PDF from that standpoint.
That's fine.
Then, if you would, when I come across other folks, if you're looking for other people to interview, I'll pass your name along. And if you know of anyone else, I'd appreciate it if you pass my name along too.
I will do. Thank you, Andy. Yeah, for sure. I'm sure we can collaborate that way. Awesome. Very good. I'm not going to take any more of your time. If you shoot me that information, I think as we've started communicating on Facebook, we may as well do it on Facebook for now.
Okay.
It doesn't really make a difference. I'm traveling for the next 2 weeks, so I think it will be a few weeks before everything is done and dusted, if not earlier, but we'll see how we go. But yeah, okay, send me the information, and I'll pass it along.
Great. Safe travel. Where are you going in the U.S., by the way?
Orlando.
Oh, very nice. We were just down there over Christmas. You going out for business or pleasure?
I'm attending the Financial Marketing Summit.
Nice.
Yes.
All right. Safe travels.
Thank you, Andy. Have a good day.
See you.